What's up, everybody? Welcome back to Trades and Gains. I'm your host, Max Pitts, and it looks like the market was red like a woman who just started her period because we just had one of the ugliest trading days we've seen in literal years. I think the last time it was this bad was in 2022. We had the Dow Jones lose over 900 points. We had the Nasdaq crater 4%. Tesla's down 15%. NVDA, Meta, Apple are all getting smoked like that last doobie blunt in the ashtray. And Bitcoin plunged below 78,000. Is this the start of something bigger? Are we heading into a major correction? And what's the options market signaling right now with all of this volatility? Let's stop the foreplay and dive straight into it. So, folks, the sell-off is here and it is well and alive. The markets just, again, they had their worst day since 2022. But you're probably wondering, well, why, Max? Why did they have the worst day? Well, hold on, we're in the wrong report. First things first. So let's get to the right report. So today, Trump's tariff war was heating up. So that is first things first. Let's just get that out of the way. So we got Trump threatening tariffs, which is super fun. Fresh ones on Canada, Mexico, and China just hit like a Mack truck, and retaliation is coming in. China slapped 15% duties on U.S. farm goods, and Canada fired back with major tariffs. Trump's Sunday interview: the economy is in a period of transition. Translation, even he knows this is going to get rough. So it looks like, folks, that trade war that we all said we had no business being in, well, it looks like Normandy Beach is about to hit. We also had tech stocks leading the collapse here. The Mag 7 is getting absolutely wrecked like a girl on a casting couch. Tesla's down 15%, wiping out all of its post-election gains. NVIDIA, Meta, and Apple are all down 4 to 5% respectively. And the Nasdaq officially in correction territory, meaning it's down 10% from its highs. Now, why is this happening? Recession fears is going to equal lower consumer spending. So that means less discretionary spending on stuff that we don't need, which is what all those companies make. Bullshit we don't need. The AI bubble is starting to cool off potentially. Look at NVIDIA. I think 5 of their customers who spent a combined $44 billion started to scale back their spending. Maybe people are starting to realize that this AI bubble is ready to frickin' pop. And fun fact, NVIDIA created the bubble. So if it pops, it's gonna get ugly. And options traders are betting against high flyers consistently. We also have Bitcoin and crypto selling off. Bitcoin take below 78% or 78,000, which is down 28% from all-time highs. Trump's White House Bitcoin summit did not stop the bleeding as many thought it would, and altcoins are absolutely getting their ass crushed right now as well. And Goldman Sachs slashes its GDP forecast. Goldman just cut their U.S. growth forecast from 2.4% to 1.7%. That is horrible. Inflation concerns are forcing the Fed to delay rate cuts now, and this is why markets are panicking. Slower growth is equal to higher inflation, which means there is no Fed bailout coming. Now, mind you, we've been talking about this for weeks. We've been talking about the possibility that we get a major correction and SPY's not done bleeding, and with inflation remaining sticky and rampant and soft labor market, there's so much that's going into this where this really isn't much of a surprise, at least to me. But then again, I'm covering the market every day. So this is really the only stuff I read and pay attention to, if I'm being honest. So let's go ahead and hop straight into some of our big money plays and see what's going on in the options market here. Let me go ahead and move all of this over for you all. And we're going to go ahead and use Investor Central Club so we can go ahead and see what the hell these institutions are doing behind the scenes. You know what I mean, buddy? Now, where's the smart money moving in this scenario? We have SPY and QQQ Puts are piling up big on SPY and QQQ, as we can see. We had 133 million in total flow, with only 18.37 in calls versus 115 million in puts that were called out on SPY today. And in QQQ, we had 63.76 million in total flow, with 27 million coming in calls versus 36 million in puts. Most common contracts for the SPY. What the heck? Most common contracts, hold on, let's go ahead and pull these up for you, are going to be, come on. There we go. So we had the SPY, we had SPY puts here, and we had QQQ 403s, I believe. We also had NVIDIA and Tesla in the hot seat. We have huge bearish bets on NVIDIA and Tesla as well. Despite NVIDIA being a little over on the green side right now, we have NVIDIA with a 74.99 million in total flow, with 58 million coming in calls against 16.79 million in puts. NVIDIA puts are seeing major flow right now. We're seeing where are we at? Let's go ahead and pull these bad boys up. We have big calls coming in at the 110 strike at a 430, with a $1.15 million premium spent on that. And Tesla is getting hammered, and the puts are outpacing calls currently 3-1. Not even that, though, because if you look at it, we had 24.62 million in calls against 29.62 million in puts. Our Bitcoin ETF flow, institutions are indeed offloading BTC Bitcoin exposure right now, and IBIT put flow was absolutely spiking today, so they were not safe to this whatsoever. Now, what does this mean exactly? Markets are bracing for more downside. Tech could see another 5 to 10% drop if support breaks here. And if CPI comes in hot on Wednesday, trust me, you think it's bad now, it's only going to get worse. One of mine, I think we could see SPY at like 535 within the next week, potentially to 2 weeks. So be on the lookout for that. And I will make sure to keep you guys updated as more data comes out. Now, where do we go from here exactly? If inflation runs hot, rate cuts are off the table. Bearish for stocks, more pain ahead for techs unless we see dip buyers start to step in, and the options market is pricing in more downside. Next support on SPY is 49.50, so 495. Now, what to watch this week? We have CPI inflation data on Wednesday, which could be another catalyst for a big move in either direction. An options expiration Friday, which could add more volatility as well. And look out for any news on tariffs. This is driving everything right now. The final takeaway is this isn't just a random dip. We could be looking at a serious correction in the overall market. So stay sharp, trade smart, and don't get caught up on the wrong side of the move. Smash that like button if you found this helpful. Subscribe for more daily market updates, and drop a comment, where do you think the market is headed next? Follow me for real-time updates on Twitter and Substack and everywhere else on social media so you never miss a market update. I love you all. I hope you're all having a fantastic day, and I will see you in the next episode.